Hey everyone, this is Heather, and this is the first video in our mini series on how to use the options flow in Traditics to find really profitable trade ideas. So this is a series on sort of how to do some manual analysis to find really good trade ideas. We also have some other series on how to use our AI tools to find really good trade ideas that are tools post. But this is going to be a slightly sort of manual analysis series, but this is going to be a very interesting one, and I am hoping that you're going to get a lot of benefit out of this. So we are going to talk about two types of trade ideas. We are going to first talk about intraday trade ideas from the live options flow and options flow dashboards, and then we are going to also talk about swing trade ideas. This video is about Tesla and an intraday trade idea that we could have found if we were looking at live options flow, and this was a really good one. We are also going to have videos on how to find swing trading ideas instead of day trading one, and what are some of the differences when you're looking at options flow, especially and you want swing versus intraday ideas. So the reason we want to go into Tesla is that I'm creating this video on May 2nd, 2021, and on the last Friday, on April 30th, Tesla rallied for like $40. It opened at 667 and it closed at 709. So that's a huge increase. So you can see this is a really big candle. It went from here to here. So the question is how we could have found this setup or this huge increase based on live options flow, and how we could have gone into a contract and then garnered huge profits. So let's see if that was possible, and let's see how we could have done that. So we're going to search for Tesla, which is going to give us all the Tesla's flow. Now if you look at the stats about the flow, and if you've seen our video on if you've seen our crash course and our video on live options flow, you might see that these stats are not fairly good, especially for a swing setup. So just by looking at these stats, we can see that the net premiums are bearish, the calls to puts are about 50%, not many calls as compared to puts, bias to sells is about 50% in sell. So there is a lot of indecision that we can see based on just these values. But since this is an intraday ideas don't have anything to do with these values. These are sort of really good for swing trading. They are not really useful for intraday trading, as I'll explain why. Then if you've seen our crash course, then you also know about these filters, so we'll use them just a little bit. But what we are going to do is we are going to the table for Tesla is sorted based on the time. So this flow is from the end of the day, but we want to look at, let's say, the first half an hour to see if this is going to rally today and to see if we can find a setup. So we are not going to look at the flow from the end of the day, obviously, because we are trying to find this setup when the day starts. Alright, so before we go into the review, this is actually a really good point that I need to, I think, emphasize a little bit more, is that if you're trying to find intraday trade ideas, then looking at the options flow in the first 15 to 30 minutes is a really good idea, because you end up finding so many good plays. Alright, so we can see that the flow starts at 9:30 because this is live options flow, so there are no delays. As soon as the first order comes in, we post it right here. First we had a put buy, which is a bearish signal, so not really good. Someone spent 300k for a 650 strike, which means someone is expecting the price, let's say, to go from 667 to 650. Again, then we can see that there are a lot of orders on put sells. Now if you know anything about options flow, you know that selling puts is a bullish signal and selling calls is a bearish signal. Why is that? So if someone is selling a put, let's say for this $20, then if the price does not go above the strike price by this expiration date of May 21, then this person is going to have to buy, let's see, what's the volume, buy 50k shares for a stock price of, for a share price of $820. So the price is, let's say, staying below 820, but this person, since he or she just sold this contract, they'll have to buy 50k shares for $820 per each share. Why would anyone do that? Obviously no one wants to do that, which is why someone just sold this call, because they are expecting the price to be above $820, by May 21st, and today is, let's say, at this point in day is April 30th. So in just 21 days they are expecting the price to reach a they're expecting the stock price to reach a high price from 667. They're maybe expecting it to reach, let's say, 830, 840, or anything above 820, because as long as it's less than 820 they'll actually have to buy the shares at 820 per share. So that's what's happening when someone is selling puts. So as you can see, this is a bullish signal, because if the price stays below the strike price, then they'll have to buy shares at the strike price. So there's so many orders here, and you can see this order is $1.3 million. So right in the first 2 minutes, in the first 3 minutes, there is just one bearish order. Everything else is a bullish order. Then we go to this call sweep. We see that this is a 900 strike when the stock price is just at $670. That means that someone might probably be expecting the price to reach 900 by July 16th. Again, that's a huge increase from $670. Now, when I'm saying someone might be expecting the price to reach 900, what happens is they're not really expecting the price to reach 900. They're just expecting the price to increase today, let's say, or at least increase in the next few days, so that the value of the options contract increases, then they can just sell it for huge profit. So they're not really expecting the price to reach 900. You just know that. Then we see a call sell. So again, I just said call sells are bearish, but you also have to note that the call sell is for a 900 strike, which means that this setup is saying that as long as the price stays below 900, I'm fine. So it's not really a bullish or bearish setup. All it's expecting is that by July 16th the price might reach towards 900, maybe it won't, but as long as it's staying below 900, we are completely fine. So this is not really a bullish or bearish scenario, because the price is so far off right now. They're like, we have to go up about $230, yeah, in order to reach this price. So someone is just collecting premiums here, so you can just skip this. Then you can see another huge order on 200k, but for the strike price of 900. Again, this someone is expecting the price to increase significantly, because the far the OTM call is, out of the money call is, the more the price has to increase in order for someone to get good profits. So someone is expecting the price to increase. Let's go up, and then finally we can see that there are again plenty of put sells where someone is selling puts for 750. So now as long as the price is above 750, they are completely fine. These people are really happy. But if the price is below 750, then they'll have to buy, let's say total volume is 100, so they'll have to buy 100k shares for 750, even if the price is below 670. So if this is not making any sense to you, please go back and study some things in options flow, what buys and sell puts means. So this is just this contract in your brokerage might be called sell to open a put, and this might be called sell to open a call, and this would be called buy to open a call. So you just know what these sell calls, sell puts, buy calls, and buy puts mean, and what's the expectation is, whether it's a bearish one or a bullish one. So this entire page in the first 6 minutes is looking extremely bullish. Not just bullish, it's looking extremely bullish, because all of these strikes have a huge distance from the stock price right now. So that's your first signal. You can see that someone is expecting the price to move quite a lot probably, and so that's your first signal. You can probably buy a contract here. Now just to be realistic, some days you might see this type of flow and the price might not move much. So you always want to just have a look at the price action to see if you can find something here. I don't see anything particularly useful here. Maybe I think this is something that you could have seen. You can see that we have a support area region here based on these levels. So maybe we had a support level which would have sort of given us a little bit of confidence, but for this particular play there was nothing. Let's see if we have something on the 15-minute chart. So we can see that, yeah, there wasn't anything particularly interesting on the intraday chart, but since the options flow was just so bullish, we probably knew that something might happen. Now let's this is just first 6 minutes. Let's actually go the next 20 minutes as well. So here we can see someone probably bought a call. If you do not see anything here, that means that we were just not sure. So let's assume that this was a bot, because you're seeing a sell right with it, and when you see buyers and sells with almost the same premium, then the same expiration date and the same trade size, that mostly means it's part of a spread. So let's just skip these, because again, as you get a little bit more experience, you'll realize just by looking at this flow that this was actually a spread. Someone bought one contract and sold one call contract with this volume. Then again, we can see that we have two put buys. So this is a slightly bearish signal. Now, you always expect, or at least if you're new, you would expect that you can just see this 100% call or put flow, and that means that this is for sure a bullish setup or a bearish setup. But in reality, you're going to find out that there is never 100% call or put flow. There are always going to be puts being bought, calls being bought, calls being sold, puts being sold. So you always just want to follow the smart money based on where the majority of it is being spent. So since in this case majority of it is being spent in a bullish manner, you are going to go bullish here. But there are always going to be these bearish orders. Why does that happen? That happens because options are not just used for directional plays. There are so many strategies that you can build using options that are either directional, or they are based on some consolidation, or they are based on some limits on where the price might go or where the price might not go. And then the options are also used for hedging purposes. So they can be used for a wide variety of things, which means that you shouldn't get concerned when you see a few orders that are going against your expectation. So if you're seeing these two buy puts, but everything else is just calls and buy calls and sell puts, then what we need to do is we just need to follow the majority of the smart money. We can just skip these, just keep these in your mind, but other than that, we want to follow the majority. Then we can see that again we have put sells, then a few call sells, a few call buys. Let's see, again there are so many puts, but some of them are buyers, sells. So this is now getting a little bit mixed. But I think if we go up, okay, we have some call buys. Again, look at this. This is a small call sell, but look at the buy one. Huge buy here, then huge buy here, then again a huge buy. So you can see that the buys are much larger than the sells. Again, a huge buy here. So there were three orders worth $1 million in just about a minute. So again, you need to follow the majority, and the majority says that there is just too much bullish pressure here and too much, let's say, bullish buying and bullish selling. That means that the overall expectation from this smart money, or from these institutions, or from people who have a lot of money is bullish, and that's what we are seeing. We can see here, and then at 9:50 we can see that again three huge call buys appeared. This was a put sell again, 1.64 million. So almost everything is going into a bullish direction in terms of the options flow. We are either seeing huge puts being sold, or we are seeing huge calls being bought. Both are bullish expectations. Let's go to one more page. Oh, look at this. These are some spreads. So we always want to ignore spreads, because spreads are not usually directional. Sometimes they are, but if you're new, just ignore these spreads. You can ignore them based on using this filter. So let's see, we have put sells here. So look at these calls. There are so many calls. This is 9:50, just in the first 20 minutes. There are so many calls being bought right now, and some of these are sweeps. And even we have a put here that was a sold put, again $1.35 million. So just look again, so many calls being bought, so many puts being sold, so many calls being bought, and then a few bearish orders here and there. So, and now we are at 10. So this was the flow from the first 30 minutes. And the price, look at where the price started. It started at 667. Look at where it is in 30 minutes. It is at 685. So we have already had about a $15 to $18 increase in the stock price. So this was an easy one, because the flow, it was extremely bullish in the first 30 minutes. And if you just looked at it the first 10 minutes, and if you followed the flow and you just realize that these strikes are far off from the stock price and someone is expecting the price to move by a large margin because of the difference between the stock and the strike price. If let's say the price was 667 and all the contracts were bought or sold for 670, 660, 680, then that's not really a high confidence play because the strikes are very close to the stock price, but in this case they were just all over the place. So that was a really high confidence play just based on the live options flow, and that's how you could have found this play and gotten into a Tesla contract. And if you had done that, then by the end of the day you would be pretty rich. So this was just a quick video on how you can analyze the flow from the first 30 minutes to find a really good intraday trade idea. You can use all kinds of filters such as complex, which is going to give you all the sweeps, the splits, the blocks. You can use, let's say, blocks, then above ask, all kinds of filters. So that's completely up to you. You can either sort of look at the flow for one particular symbol, or you can just open the flow for all symbols using some set of filters. But the main idea is still there. You need to see a majority of options flow being in one single direction, and you also want to see these 4 out of the money calls and, let's say, puts if you're bearish, to just add a little bit of assurance that this is a really good play. So I hope this is a useful video because this was a pretty clear flow and an easy play to find. We are going to see you in the next video. Thank you so much for watching this.